Hello friends, today we are going to talk about mutual fund. In this video I am going to cover what is mutual fund, benefit of mutual fund, which kind of risk involved, which kind of schemes are available, and the process of investment. A mutual fund is a professionally managed investment vehicle that pools money from multiple investors to purchase a diversified portfolio of stocks, bonds, and other securities. When investors buy shares in a mutual fund, they are effectively buying a portion of the overall portfolio, and the value of their investment fluctuates based on the performance of the underlying assets. The concept of a mutual fund dates back to the 18th century when Dutch merchants created investment trusts to pool money from multiple investors to finance trade expeditions. The modern mutual fund industry began in the United States in the early 20th century, with the launch of the first open-end mutual fund in 1924. Today, mutual funds are a popular investment vehicle used by millions of investors around the world to achieve their financial goals. They offer a wide range of investment options, from conservative bond funds to aggressive growth funds, and are typically managed by experienced professionals who make investment decisions on behalf of the investors. There are several benefits to investing in mutual funds. Diversification. Mutual funds invest in a diversified portfolio of securities such as stocks, bonds, and other assets. This diversification helps to spread risk and minimize the impact of any one investment on the overall portfolio. Professional management. Mutual funds are managed by professional portfolio managers who have the expertise and knowledge to make investment decisions on behalf of the investors. These managers analyze market trends and individual securities, and make adjustments to the portfolio as needed. Accessibility. Mutual funds are easily accessible and can be purchased through a variety of investment platforms such as online brokers, banks, and financial advisors. This makes it easier for investors to invest in a diversified portfolio without needing to research and analyze individual securities themselves. Affordability. Many mutual funds have low minimum investment requirements, making them accessible to a wide range of investors. Additionally, mutual funds can be a cost-effective way to invest in a diversified portfolio, as the costs of buying and selling individual securities can add up quickly. Liquidity. Mutual funds are generally considered to be a liquid investment, meaning that investors can typically buy or sell their shares at any time. This provides investors with the flexibility to adjust their portfolios as their financial goals and market conditions change. Tax efficiency. Mutual funds are generally considered to be tax-efficient investments. For example, mutual funds may be able to defer taxes on capital gains by distributing gains to shareholders in the form of dividends or reinvesting gains into the fund. Now understand which kind of risk are involved in investment in mutual fund. Market risk. Mutual fund investments are subject to market risk, which means that the value of the fund's portfolio can rise or fall due to changes in the overall stock or bond market. Manager risk. The performance of a mutual fund is highly dependent on the investment decisions made by the portfolio manager. If the manager makes poor investment decisions, it can negatively impact the performance of the fund. Credit risk. Mutual funds that invest in bonds are subject to credit risk, which means that the issuer of the bond may not be able to pay interest or principal payments as scheduled. Interest rate risk. Mutual funds that invest in fixed income securities are subject to interest rate risk, which means that changes in interest rates can impact the value of the fund's portfolio. Inflation risk. Mutual funds may not keep pace with inflation, which can erode the purchasing power of the investor's returns over time. Redemption risk. Mutual funds are subject to redemption risk, which means that if a large number of investors redeem their shares at the same time, the fund may need to sell securities at a loss to meet those redemption requests. There are several types of mutual fund schemes available, each with its own investment objective, investment strategy, and risk profile. Here are some of the most common types of mutual fund schemes. Open-ended funds. Open-ended funds allow investors to buy and sell units at any time at the fund's net asset value, NAV. These funds have no limit on the number of units that can be issued. Close-ended funds. Close-ended funds issue a fixed number of units that are traded on stock exchanges. These funds have a set maturity date and can be traded on the stock exchange during this period. Interval funds. Interval funds have features of both open-ended and close-ended funds. These funds have a fixed maturity date but also allow investors to buy and sell units at specific intervals. Equity funds. Equity funds invest in stocks or other equity securities. These funds can be further classified by investment style, such as large cap, small cap, growth, or value funds. Debt funds. Debt funds invest in bonds or other fixed income securities. These funds can be further classified by credit quality, such as high-yield or investment-grade bonds, or by duration, such as short-term or long-term bonds. Balanced funds. Balanced funds invest in a mix of stocks and bonds, with the goal of providing both income and capital appreciation. Index funds. Index funds track the performance of a specific market index, such as the S&P 500. These funds typically have lower fees than actively managed funds and aim to replicate the performance of the underlying index. Sector funds. Sector funds invest in a specific sector of the economy, such as technology or healthcare. International funds. International funds invest in stocks or bonds from foreign countries. These funds can be further classified by geographic region, such as emerging markets or developed markets. Exchange-traded funds, ETFs. ETFs are similar to index funds, but are traded on a stock exchange like a stock. These funds can be bought and sold throughout the trading day at market prices. The process of investing in a mutual fund typically involves the following steps. Identify your investment goals. Before investing in a mutual fund, it's important to identify your investment goals and risk tolerance. This will help you determine the type of mutual fund that's best suited for your needs. Research and select a mutual fund. Once you've identified your investment goals, you can research and select a mutual fund that aligns with those goals. You can use a variety of resources to research mutual funds, including financial websites, investment publications, and the fund's prospectus. Open an investment account. To invest in a mutual fund, you'll typically need to open an investment account with a broker or financial institution. Many mutual funds can be purchased directly from the fund company or through a brokerage account. Choose your investment amount. You'll need to decide how much money you want to invest in the mutual fund. Many mutual funds have minimum investment requirements, so be sure to check the fund's prospectus for details. Place your order. Once you've selected your mutual fund and determined your investment amount, you can place your order. This can typically be done online, over the phone, or through a financial advisor. Monitor your investment. After you've invested in a mutual fund, it's important to monitor your investment regularly to ensure that it's still aligned with your investment goals and risk tolerance. You should review the fund's performance, fees, and any changes to the fund's investment strategy. Overall, mutual funds offer a convenient and affordable way to invest in a diversified portfolio of securities. They are managed by professionals, offer liquidity, and may be tax efficient, making them a popular choice for investors looking to build a well-diversified investment portfolio.
If you like our video, don't forget to like, share and subscribe our channel and hit bell icon for latest video notifications.